Welcome back to the channel. I hope everyone is having a great day. So unfortunately, we have to talk about a chart, something we've never seen in our lifetimes before, and unfortunately things are just going to be getting much worse before they actually get better. And we also have to talk about a couple other things in the short term that could have very large implications on the markets. And we're also going to get into the charts of Bitcoin, Ethereum, and the total market cap of cryptocurrency and cover what's going on and what you guys need to know in the short and the long term. But before we dive into these markets, I do want to urge you guys to like and subscribe down below for these daily updates in the markets, and also leave a comment of what you like, what you didn't like, and what we could do better. But let's jump right into it. So the first thing that we have pulled up over here is the total cryptocurrency market cap, including Bitcoin, stablecoins, and all the altcoins. Now, as you can see, it's roughly sitting right around $899 billion, as we dropped all the way from that $3 trillion market cap at the peak right around here at the beginning of November. Now, one thing that I do want to urge you guys is, obviously this looks very similar to what Bitcoin is looking like, but it's going to be selling off by quite a bit more. Now, when we're looking at this, I think a lot of the sell-off can come from the altcoins, and what we're going to see is, as times get a little bit more difficult, as we start to sell off a little bit more, what we're going to see is that more money is going to be pouring into Bitcoin and possibly Ethereum, because those are going to be seen as the safe havens as for cryptocurrency, really. And one thing that I really want to pull up is, if anyone knows, if you've ever watched my channel, we like to use the Fibonacci retracement tool. While it is not perfect, it is definitely something to keep in the back of your mind. Now, just for anyone that's brand new, Fibonacci retracement basically is like a mathematical series, basically found out by this Italian mathematician, but it has a lot of implications in the world and a ton of things. So without wasting any more time on that, basically what you want to do is you want to take it from your peak high to your drop down here, so these two white lines, and then what we see is we see a retracement to this red line right around here, or a 38% retracement. Now, in a down market or a bear market, when you have a shallow retracement, typically you're going to have a larger extension to the downside. So I've color coded it to make it very simple, but if we have a retracement to this red area, we should have an extension to this red area. And basically these are coming back to the 2018 highs, back right around here, where you have a lot of liquidity back in the markets from pre-pandemic areas, and then also back here in the 2018 bear market. So this also comes in confluence with us dropping at least another, let's say from right around here, at least another $500 billion in the cryptocurrency market. Now, currently Bitcoin is below $500 billion. So I think a lot of this drop is going to come from a lot of altcoins, a lot of meme coins, and a lot of that money is going to be transferred out of the cryptocurrency market, and anything that does stay in the crypto market is going to be transferred into Bitcoin and Ethereum, as those are seen as the safe havens for the crypto markets. Now, when talking about Bitcoin specifically, one thing that I've been noticing on this chart is another really interesting theory that, if you've never heard of, is called Elliott wave theory. Basically, it's a 3 impulse structure wave in the markets, and it plays itself out over and over again. And typically what happens is you can have a 3 impulse wave to the upside, or something to the downside. And obviously in this bear market, we're looking at the downside. So first off, we have this first push to the downside, and then we have this retracement, a second push, a retracement, and now we're looking at that third push. And this should be the area possibly where we kind of, stall out and hopefully just chill out at, because if the price continues to go lower, then we could lose a lot of market cap in Bitcoin. And the reason that I got this price is, again, the bear market of 2018 and a lot of these volatility and liquidity levels back here in pre-pandemic prices, which I honestly think we could make. Now, another thing leading me to this conclusion is that if we take the 3 impulses to the downside, coming from here, we had a 50% drop in this first drop from the all-time high to this first retracement. If we take the next one, look over here, another one is around a 63% drop. And then if we take it from this high right around here, if we drop around 50%, that could lead us to 12,000, and then anywhere around 60% could lead us to the 10,000 level. So honestly, for me personally, I see us dropping down to this blue liquidity zone for multiple reasons in terms of Bitcoin's price, which could be anywhere from $16,000 to basically $10,000 in its price. And basically when looking at Ethereum, I'm going to do the same thing that I did for the cryptocurrency market cap. When we take the Fibonacci retracement tool, we have a retracement to the 50%, which means it retraced 50% of this drop back to the upside. And what we should see possibly is another extension to this yellow, because we retraced to the yellow line. So we should, in theory, extend to this yellow line, which could bring Ethereum back to the $500 level right around here. And again, looking left, these are pre-pandemic levels and 2018 bear market levels, which I think are very good in terms of buy power and could keep the stability of price even if the economics around us are continuing to fall. And until we break out of this downtrend, I don't really think Ethereum is going to do anything. Obviously, in terms of, when the economics shift over in the later parts of 2023, we're just going to have to wait for Ethereum to break out of this model, because until Ethereum breaks out of that downtrend and the economics are starting to look good and maybe the Fed pivots, Ethereum is just looking like an accumulation area right around this area. And personally for me, at around the $700, $500 level. So getting away from the charts and going into some very short-term things that could have implications in the markets. Right now, out of nowhere, there was a closed board meeting that is going to be held on October 3rd by the Federal Reserve. And basically, they're going to be talking about things that will be held under expedited procedures, which basically means who really knows what they're going to do in the markets, but they're looking to do something very quickly, as they're holding an expedited meeting on October 3rd, which comes in just a couple of days as of making this video. And on top of that, I do have some charts that I really want to look at. Let's get into the meat and potatoes of the data in terms of the long-term things as to why this bear market could last into the middle or later parts of 2023, and why things are going to get pretty ugly because of how our monetary policy was treated over the past decade. So the first thing we have to get into is that this is something we've never seen in our lifetimes personally, and there's a couple of reasons behind it. Obviously, as M2 money supply continue to rise, as money is being inflated away, the number of this $36 trillion is a little inflated, but still, according to the charts and the data, this is just something we've never seen before in terms of a sell-off. So what we have is that US Treasuries and stocks had a record of $36 trillion lost in value over just the past 9 months. And this is the chart that I am referencing. And if we take a look, this is a little bit more visually appealing. You could see that over here, this is over $36 trillion lost in the markets. Even the global financial crisis, the 2008 financial crash that everybody was talking about when it happened and still does to this day, wasn't even close. I mean, it is literally currently right around 23 trillion and we're at 36 trillion. And so that tells you exactly how bad of a predicament that we're actually in. And if you take a look left, even the .com era wasn't even as bad, not even close. We've never seen this type of a sell-off. We've never seen money leave the markets at this type of an event. And don't spend too much time trying to figure this chart out. Basically, these three lines, the black, the red, and the blue, are just volatility in the markets. Now, you would think volatility is good, and you're probably used to it if you're investing in the cryptocurrency markets. But these are literally for treasuries. These are for bonds. These are for things that are supposed to be stable, things that are not supposed to be volatile. And yet, over the past 9 months, we've had increasing volatility in these markets, which is something you do not want to see when it comes to bonds, when it comes to things that are supposed to be stable and safe and what people would call a guaranteed return. But yet we are getting increasing amounts of volatility, which is very scary for these types of markets, as you could see, because we're losing $36 trillion in these markets. And the funny thing is that when we talk about hard times, typically when you're talking about risk assets, everything leaves the stock market, and what they do is they go to treasuries and bonds as a safe haven. But yet treasuries and bonds and even gold, the inflation hedge, the two traditional safe havens, have lost even more value this past quarter than Bitcoin and the US dollar. So your traditional safe havens, these two right here, over times when people are supposed to be putting their money into it because things are going bad, they've actually lost value. And when you ask yourself, where's the money going? Well, one, it's just being lost because of what's happening in the economic recession that's coming. It is going into Bitcoin and obviously another safe haven, cash, because right now cash is, I never thought I'd say this, but cash is king at this moment. But it's starting to also show you that we are transitioning into a new model. People are ditching the old ways of gold or global treasuries and gold as the safe havens, and they're going back into a new alternative, Bitcoin. Now, one thing that did really pop up to me that I thought was very interesting is that if you look at the S&P 500 quarterly closes, the last time that we had 3 consecutive closes for the S&P 500, that was in the global financial crisis of 2008. And the last time before that was the dot-com era. So again, this happens typically with recessions, and that's exactly what we got here, basically telling us that yes, for the third quarter in a row, the S&P 500 and basically the GDP or economics of the United States is going down. And typically when that happens, you tend to see quite a sell-off in the markets. And after we've looked at the past data that we literally just talked about, this is something worse than we've seen in the past 2 recessions. So we can only imagine how low we may go. I mean, pre-pandemic levels for sure, in my personal opinion, but can we go even lower than that? Maybe, back to a couple or few years ago, maybe to levels of around here. I guess we're just going to have to wait and see. And one of the main reasons for this and one of the struggles is because over the last decade, the monetary policy of the Fed was extremely easy. I mean, the quantitative easing, they were just printing money like it was nothing. And obviously we're paying the consequences of it now. But basically, whenever you were looking at stocks or cryptocurrency or literally anything, it felt like everything was going up. Everything was being very overvalued. And if you look at this is basically showing you the PE ratio of companies and stocks and everything. And the average was over 40. I mean, companies were basically being overvalued and they didn't even have any profit yet. Like, there were so many SPAC mergers, there were so many things that were just, they didn't make sense in the markets. But again, we had so much money that people were putting them into basically anything. And so now we are facing the problem of zombie companies in the United States. And just to read it right off the chart, it says zombie companies are now growing at a concern and are defined as companies with an interest coverage ratio of less than 1 for 3 straight years. Basically meaning your profits don't even cover your debt plus the interest you owe. And so when you can't make a profit in your company, typically you die off. And if you look at this chart, what we're seeing is that almost 25% of companies are now zombie companies, basically meaning a lot of these companies are going to go bankrupt. They are going to lay off a ton of their employees. And these aren't just like small companies. These are companies with tens, hundreds, and a couple even with thousands of employees. So the layoffs haven't even started yet. Unemployment is still very low at 3.7%. But once that number starts to tick up, that's when we're going to really see the pressures of what happened in 2008 during the global financial crisis. And you can only hope that the Fed really does bring inflation down, because if unemployment starts to go up and inflation doesn't go anywhere, then that's when we really have a problem. And the last chart, a little bit more Bitcoin centric, because I know we've been talking a lot about macroeconomics, which I think are important during these times, is if you look at the drop below realized price. Basically, realized price is the average purchase of Bitcoin, and whenever that drops below, that's typically obviously signs of a bear market, but it also shows that over the past couple bear markets, we've had quite a bit of time below that realized price. In 2018, around 133 days, and then 2014, we went down 3 different times, 69 days, 121, and 84. Currently, we've only done 35 and 22 days, so this might be showing us that, hey, maybe we could stay down here for anywhere from 60 to over 130 days. But again, we'll just have to wait and see. But as of right now, this is definitely a good time to get Bitcoin at a very cheap discount compared to the market. But that is literally everything I have for this video. If you guys enjoyed it, if you found it valuable, please subscribe and like the video down below. And in the comments, let me know what you like and didn't like about the video and what we could do better for the next one. But until the next video, I'll see you guys then. Peace.